What is good, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. What a week we had last week. We had the FOMC. We got 0.75% hike from the FOMC, and we're going to discuss what we did last week. Also, we're going to look for what we can potentially look for this week to come. If that sounds good to you, make sure you stick around. All right, so first thing is first. Currently, you can see that we got the old all-time high up here on the intraday chart at $19,891. Last night, this thing plowed right through that level. You can definitely tell that there was a lot of stuff going on at that level just from the sheer size of this hourly drop. And if you notice, that's almost about the midpoint of that candle's range. So not really looking good. All right, so here we are on the 3-day chart. Last week, we had a primary target of this wick low. You can see that we did take that out. We also had a secondary target of 23,849, which is just simply an old area where you did get a bearish close on the 3-day time frame. And as you can see, size of this weekly expansion, this is the long squeeze that I was talking about in last week's video. If you haven't seen that video, go check it out. I'm going to put a link for you up in the right hand corner right now. All right, first and foremost, we're going to start with the MVRV Z-Score. We were looking for the MVRV Z-Score to get down into this green area. This green area is considered undervalued. If we stretch it out, let's just go back 5 years. You can see that every time we've had a bear market low, once we've gotten into the green area, the undervalued region, it's typically been a good spot to start looking for support. Now, we just got into it, so we just now got there. So you don't necessarily want to be looking to buy this just yet, as you can trade under the green line or in the green line for very many months. Okay, so we could see 3 to 4 months of sideways trading going on inside of this undervalued region. It's happened in the past, and although past performance is not indicative of future results, it's just a good area to look to maybe close down any shorts that you got going on and potentially look for some supports to start to form. There's nothing on the macro that could suggest that the bear market is over. All right, so here is the open interest. If you remember, we did get that lower move, and I was saying that I was going to be looking for a potential squeeze to the downside, looking for a bear market expansion, simply because the open interest was still up very high, and we were seeing a ton of accumulation happening across all exchanges on this accumulation trend score. So when you have a lot of people coming into the markets trying to be a buyer, they're trying to call the bottom, or what they think is the bottom, then they're going to throw their stops under a wick low. That's why it was our primary target. And since the futures open interest was still so very high, even though we did get a decrease in the price, that let me know that we did not see any long liquidations. So going over here to the long liquidation chart, remember, we've seen all these little tiny valleys, these little tiny peaks. I was looking for a spike in long liquidations, and there is that spike. Now, we did go over this a little bit inside of the week because I did have 2 live streams, but if you just watched the Saturday uploads, then you didn't see this yet. And this is what I was looking for to happen. We got the move almost perfectly that I was expecting to happen last week. So fantastic stuff. But this also tells us something. Now that we've gotten that liquidation event, it's not necessarily a capitulation yet, but it was a liquidation, and liquidations are important when you smoke all of the stops. If you get that when open interest has a pretty big drop or a steep decline, this could mark a near-term bottom. All right, not a long-term bottom, a near-term bottom for the next week or 2 potentially. This could be the bottom, and we will start to trade it as such, as long as our intraday levels hold, and that's what we're going to be looking for. Also, if you look at the options implied volatility, we were looking for an incline, if you will, because we had bottomed out over here like we were discussing. So we were looking for this thing to expand, and we got that on the move down. So everything played out All right, coming back over here to the weekly time frame, this is the long liquidation region. This was our primary target. Once we hit that, you can see how the cascading event took place, how you just got more and more and more selling coming into the market, stopping everybody out. So we have been oversold on this indicator for a few days. This indicator hit oversold on the weekly really early on into the week. Now you can see that we're even lower. Now this is an all-time low on the weekly RSI, on the BLX index. You've never seen a weekly oversold this bad on Bitcoin ever before, so that's something new. Also, we took out the old all-time high and we're trading under it currently. That's also something new. Remember, we have a macro bear market in place. You are seeing risk come off and it's all being manipulated by the FOMC, the Fed. But we can see that we're oversold there on the weekly. We're also oversold on the 3-day, and now, remember last week's video, we were around in here and I was saying you could see, a move similar in this size again to get back down to the oversold regions. Here we are, daily hit oversold on the 13th of June. That was the liquidation day. This is also the day that we got under the 200 simple. So this wick low plus the weekly 200 simple moving average is where all those orders were stacked up. People were looking to buy this region. Notice how you got almost a midpoint test. That tells you that this was the area, and it also tells you that the market was wanting to go lower. So anybody that got long, just looking to get long on a test of the 200, they're obviously stopped out, and everything isn't looking so good for them right now. Now, with that being said, being at or around the 200 simple has been a decent area to start to look to become a buyer, and you do have that on the weekly RSI as well. If you look at the BLX index, this chart on Coinbase doesn't have enough data to populate the 200 to go look in previous cycles, but if you look at the BLX index, you'll see what I'm talking about. Now we're trading well below that. What if I'm wrong? What if this isn't going to be a near-term bottom and this weekly downside move continues? What are potential support levels that I'm looking for? All right, well, first and foremost, let's go out here to the yearly chart and go to the first ever time that the term Heath level was coined. It was from the yearly resistance level when we tested it here in 2019. We traded up into that region, and that's where we seen a rejection. So when we started to trade back up into it again, we were looking for, potential resistance there again, and it did not hold. So that was the breakout, and the bull market ensued. So now that we're in a bear market, we could potentially look for price to trade all the way down to $13,863. It is yearly resistance or, potential support. Here on the quarterly chart, you're going to see that it also lines up beautifully as quarterly support, and also on the monthly lines up absolutely flawlessly as monthly. So you have a quarterly, yearly, and monthly level at $13,863. So if this low is not the swing low for a little while and price gets continuation, then down there I will look to be a buyer hand over fist. If we get down there, I guarantee you I will be buying up as quickly as possible, and for as long as it trades at that price point, I will be a buyer. So that's what we're gonna watch. That's a longer term level. I'm not necessarily looking for Bitcoin to stretch down there. You can see that this monthly candle is pretty stretched out. It's just as big as this one. So yeah, it's probably getting pretty close to the low of the month, and we're going to be keeping an eye on it. And I am going to be trading it this week for that. Going to be watching for intraday support and preferably daily support to form to look for potential longs, because I do think that we're going to see a relief rally. Now, here's the thing. If I bring another line up over here onto the yearly chart and check $28,990, go back into the daily, that is yearly supply. All right, that's a yearly supply level. So you can see that yearly supply is basically what kept price above it for so long here. The last time we had a consolidation, broke down below it, and here we are. So we could potentially see price regain this level. And if we do, similar to how I was looking for $35,000 for potential short side entries, until we get 3 consecutive lower CPI prints, I believe you're going to be trading in a pretty big range. So we're going to be looking to short tops, and we're going to be looking to buy bottoms because this range could last for several months. All right, so basically the $26,000 target that we had was hit here. There was a gap here. That gap has been completely filled. This was the gap that I was speaking of. This was my first bear market target. We hit that here. Well, you know, that day on the 13th of June, we also took out that gap completely. So that gap has been filled. Now what we have is we have currently on the CME chart 3 unfilled gaps. We have this one up here at 35K. That's that monthly support. Yes, price could trade all the way back up to 35K. I'm not saying that it can't, but if it ever does, you can guarantee that I will be looking to add short positions at that price. Here is going to be 28,000. That's the last gap we made. That also matches up with yearly supply. So a fillage of this gap could also mean that resistance would form and we could look for lower prices. All right, so right now on the spot market chart, we do have a low of $18,718. Now the low end of this gap for a fillage would be $18,500. So there's still currently about $300 worth of unfilled gap here. But this is the thing. If we close the spot market today and tomorrow where we currently are trading, then that means this is going to gap down on an open. So Sunday night when the CME opens again, you will have a new gap potentially from here to down. Now, if that happens, that will give me even more reason to look to buy support, looking for this gap and the new gap that happens to get filled. All right, because if you open back under here, you have this gap plus a new gap, and that could give us a really good opportunity to look for a price to spike back up and close both of those unfilled gaps. Now, I typically don't trade for gap fillage, but with everything that we've seen and we discussed already on the open interest, the longs, the squeezes, everything that we looked at could potentially signal that maybe we have a weekly low and a monthly low intact for the rest of the month. So we got about almost 2 weeks left on the monthly range, so we could potentially look for this gap to be filled, and that's why I'm looking to buy any support that gets formed. So we'll see what happens this week, but as of right now, what I'm looking for is support to be formed pretty early on into the week. At least by Tuesday, I'm hoping we'll have that support. We will look for an upwards expansion, so we'll be looking to get long. We're not trying to pick a bottom. We're just going to start trying to trade a range that I believe we're going to see in the next few weeks. So if this video helps, make sure you don't forget to smash that like button. If you're not subscribed yet, go ahead and do that as well. Thank you guys so much for your time. Make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.